I think the thing for me is these cycles, they repeat. And people say, history doesn't repeat, it rhymes. No, cycles actually repeat. And so every 4 years we have this, up and down cycle of crypto winter and crypto spring, crypto summer and crypto fall. And, we had a really bad crypto winter. And now we're kind of in that crypto spring where it's kind of choppy and not making any progress. And sometime early next year, we'll end up back in crypto summer as we anticipate the next halving in early 2024. And I think then it could get exciting again. But boy, in the interim, it's going to be tough.
Hey guys, welcome back to Library of Wealth. Today we have Mark Yusko discussing the current Bitcoin market. This comes at a time when the crypto market is emulating the downturn in the stock market, which is expected. Fear in the market is to be anticipated, especially following the collapse of FTX and the uncertainties around further financial contagion. Despite the Fear and Greed Index indicating instability across the market, Mark Yusko remains bullish on Bitcoin. There's a coming cycle for Bitcoin, though, that only comes every 14 years that no one is talking about. Mark discusses what we can expect from this coming cycle and some of the economic indicators to look for. Yesterday peaked right at $17,000, and as of the recording of this video, Bitcoin is sitting just above $17,200. Let's check out this interview as Yusko gives us his take on the current state of the Bitcoin market and where crypto is headed in 2023. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
You bring up the great analogy and comp, right? Which is 2000 to 2002. And it was exactly like we're going through today. And it was the result of this long-term trend in technology. So technology evolves over a 14-year cycle. Why it's 14 years has to do with kind of the creative class being young people, and it's half a generation. But it's, 1954 was the mainframe, then 68 was the microchip, then 82 was the personal computer, 96 was the internet, 2010 was the mobile net, and 2024, still coming, is the truth net or the blockchain era. And what happened from 96 to 00 was you had this internet thing get created. And people were like, oh, it'll never be more important than the fax machine, according to Paul Krugman. And it's a fad and it'll pass. And the newspapers said it was terrible. And all these companies like Netflix and Amazon, they were horrible. But you had this bull market from 96 to 00. And then we had a crash. And that crash, right, it killed off all the bad stuff. Right? And it was necessary. And so 90% of the bad stuff went away. The art.com, art technology groups, right? They were the company that helped you turn your company into .com. No value, just change the name to .com. The stock price went up. And there was a thing called Digital Island, which was a little hosting business out in Hawaii. And that was replaced with subsea cables. And so there were a lot of things that needed to go away because we got in a bubble, right? Up to the point recently, the worst bubble in history. And what was interesting is as the bubble popped, the bad companies went away. Pets.com disappeared. Chewy.com today, 30 years later, is the same company. It's the exact same company. 20 years later, it's the exact same company. We needed GPS tracking, we needed broadband, we needed more penetration of the internet. And so it was ahead of its time. And Webvan, right, is Amazon and Whole Foods today. And Amazon in 01 to 02 went down 94%, right? Everybody remembers that. When was the right time to sell it? Well, not then. That was time to buy, but everybody was running away. And so inevitably we get these cycles, and just like in crypto, so crypto is here to stay, right? Blockchain technology is the next operating system for the Internet of Value. So you and I are using voice over Internet protocol right now to talk and video over Internet protocol. And the incumbents hated that, right? They tried to pass a law in 1996, 97 to stop voice over IP. The telephone companies paid regulators to try to pass a bill. And Al Gore, right? He didn't invent the internet, but he did kill that bill. And similar what's happening today is the regulators are saying, oh, we got to clamp down on this and all this bad malfeasance. I'm like, how many banks have failed since 1987? A lot, like hundreds and hundreds. How about the global financial crisis? Was that pretty bad? Yeah. Did we stop using banks? No. Did we stop transferring money between banks? No. Did we stop investing in the stock market because it went down a lot? No. So this idea that suddenly this technology is going to go away is silly. Now, are the regulators going to try to beat it down because the incumbents want it to stop, right? The banks are being displaced by blockchain the same way that media and commerce was displaced by the internet. The banks are seeing assets leave to these alternative forms of financial services because what blockchain does, it replaces trust with truth, right? In the old days, I lent you money and you had to rely on me being trustworthy because I kept a ledger. I had a single entry ledger and I wrote down Blake owes me $100. But I'm an unscrupulous guy, so I wrote down 200. You come back to pay me back 110 next year. And I said, oh, you owe me 220. No way, I only borrowed 100, says right here in the ledger. So the Medicis, 1,200 years ago, came along and said, no, that's a bad system because we don't trust Mark. So Blake, you keep a ledger, Mark, you keep a ledger, and we, the benevolent Medicis, for a small fee, will decide that the ledgers match and what's the right number. So we will be the trusted third party to establish truth. So I lend you $100, you come back, I wrote down 200, I paid off the Medicis to say that my number's right, you owe me $200. So it can still be messed up. And banks have paid $360 billion of fines for bribery, money laundering, all kinds of malfeasance, because it turns out you can't trust everybody all the time. So what blockchain does is it replaces trust with truth. So if I want to send you money today, you have to have a bank account, I have to have a bank account, I send you the money, and they charge a fee. Well, wait a second. Why do we trust them, right? I have this recurring nightmare, Blake. I go to the ATM, I punch in my code, and it says 0. Like, how would I prove it's not 0? I don't have any statements. I haven't had a statement in 10 years. And it's their word against mine. They're bigger, more trustworthy, right? So people say, Mark has no money. So I send you the money and there's no money there. Bank of America took it. So, and I'm not saying they did take it, but they could. So with blockchain and Bitcoin in particular, right? I have a Bitcoin. The network says thumbs up, Mark has a Bitcoin. Okay, no banks, no third parties, just the network, the algorithm. Okay, I send it to you. You've got it. Network says, yep, that happened. Okay. Now you've got it. It's Blake's irreversible, immutable, permanent truth. It's truth that Bitcoin went from me to you. And it's on a public ledger, immutable record for everyone to see forever and ever. I can't take it back. I can't say, oh, I didn't mean to do that. Oh, Blake fooled me, whatever. That transaction happened. And so by replacing trust with truth, we take $7 trillion. 7 trillion, that's a big number, right? $7 trillion of waste that goes into bank fees, overdraft fees, transfer fees, custodial fees, accounting fees, auditing fees. Lastly, I'll say that still pretty excited about Bitcoin. It's the future of money. It is a better form of money. Money is an asset that exists in the absence of a liability. Gold is the only money in the world. Everything else is credit, it's currency. It's backed by debt. And we're going to see how bad that is going forward in the next couple of years as debt prices get whacked because of interest rates.
Mark believes that Bitcoin is not at the bottom, but he compares Bitcoin's future as the blockchain equivalent of Amazon, which at one point fell 95%. If Bitcoin gets written down, it's hard to tell if it's worthwhile to dump that position to buy lower. He doesn't recommend exiting the market because a bull run might immediately start, and the risk of investors missing out on profit is too high. Yusko also sees that the current pattern for Bitcoin is very bearish and that it has the ability to go down significantly in the next 60 days. What do you guys think about Mark Yusko's prediction for Bitcoin and where the crypto market is heading in 2023? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.